Thank you for tuning into the All Funds Investment Podcast. Today's episode features Jordan Tonini. Jordan leads partnerships and institutions at Index Coop and also sits on the organization's Ops Pod committee. In this episode, we discuss how on-chain structured products work, the benefits of using them, and the future outlook. Just a reminder here that nothing said is legal, tax, or investment advice. Check out the full disclaimer below. We hope you enjoy this conversation. Please like and subscribe if you find this information helpful, and check out the links in the description to connect with us and Jordan. Tell us about Index Coop. What are you guys doing?
Yeah, Index Coop is, we call it the largest provider of on-chain index products. What we do is build on-chain structured products, which are slightly different than what you guys are probably used to with the traditional side of things. And the way that we've defined on-chain structured products is any protocol, platform, or vault that helps you access the risk and rewards of crypto without the need of a centralized entity. So at a high level, we are a technology company. We're a platform, a protocol on the blockchain. And our fundamental goal is to just simplify access to themes and to strategies that you'll find in crypto and do it fully on chain. Again, it's a small space. A really small percentage of crypto tokens are packaged in an on-chain structured product. I want to say it's like making up about 0.25% of the entire crypto market cap, and a very small percentage relative to traditional crypto products like ETPs and funds and whatnot. But, it's up and coming. Certainly some benefits to doing it on-chain versus off-chain that happily talk about here today.
Yeah. I could see, just looking at your website, it's a lot more transparent. It's really cool how you guys show the AUM of all the funds, or funds, not the right word. Tokens.
Yes, certainly. Yeah.
Okay.
I think that's part of the beauty of being on chain is, it's a token. It's an ERC20 token, which means it's fully collateralized and you can verify that on a blockchain, right? You can audit the code that backs it. Anyone can who has access to a public blockchain, which we all do. And it allows for you to access DeFi in a way that's pretty unique. It can be collateral across Aave or Compound. You can provide liquidity and see a yield on that. So it is super simple in its construction and pretty familiar in that it's an ERC20 token. It's just on the back end, we're facilitating all the transactions that it would require to either package a theme or to run a yield strategy across 3 or 4 different platforms, or even to recursively leverage staked ETH, which is by far the biggest on-chain structured product by a landslide that you see today.
Yeah, for sure.
And you've covered a couple things there. So, tell us, you use the word structured products. What does that encompass? What could be done with a structured product on chain?
Yeah, a lot. I think you can, whatever your imagination can pretty much spin up, you can do if there's liquidity and if there's a trusted platform to help facilitate it. I think what's awesome about being a protocol is that composability, right? We're able to go out and use other awesome protocols that are doing things like borrowing, lending, LP, that potentially derivatives, options, whatever it might be. And again, package it into a single thing. So what we've done to date is try to put what we think are kind of the big bets, the big tools that asset allocators on chain can use to access the risk and rewards of crypto and build those products in-house or with a good trusted methodologist. So we've got traditional, what we call index tokens, which is pretty familiar to most people, I'm sure, listening, in that what we're doing is going out and actually facilitating the packaging of a theme, right? So we have decentralized finance, where if you hold the the DeFi Pulse Index, you're actually holding the 13 or 14 underlying DeFi governance tokens in a vault in your wallet. So again, just facilitating that theme and making it easier for you to access it. We've got a metaverse index. We just launched a cross-chain, the first ever large cap index, which we're really excited about, especially as the market kind of turns a bit more macro. Investors are coming into the space. And we've played with a few other index tokens over time. So that's one good use case for on-chain structured products. I will say that that's not in flavor right now. I think people are probably more interested in yield, in particular in leveraged yield. Like, it doesn't fit into the meme coin narrative or the 150x perps trading narrative, unfortunately.
Sure.
So But it's a good use case for on-chain structured products, in particular as the space continues to mature and we see more projects and tokens that have true value that people want to find in those themes. Yield strategies are a big one. I mean, those are by far the biggest in our space today, particular across ETH yield, whether it's borrowing, lending, whether it's staking, just facilitating, again, going out, staking ETH or borrowing it across a platform. That's a big one. And then I mentioned this earlier, but recursive leverage yield, I think, makes up 50 or 60% of the on-chain structured products. It might even be more than that. It's a very simple strategy, but that just tries to get you more of a return on your staked ETH. And again, being able to both offer yield and then package some leverage in there. And from the user's perspective, you're just buying a token or you're putting your money into a vault or whatever it might be. That's what makes this space super unique, right? It's that kind of automated strategy side of things. And you can see how that might translate to traditional asset allocators who are looking to get involved in the space, or someone with an idea who might want to build something themselves on chain. It's just kind of endless what you can do with them.
Yeah. So, kind of going through that, Jordan, what were the types of clients that kind of come to you guys today with interest in what you guys are building?
Yeah, I think it's largely been on-chain retail today, but it's tough for us to really know. Again, they're ERC20 tokens, and a lot of these are bought via, say, Uniswap or via our mint redeem mechanism, where you have a completely anonymous wallet that is
Right.
facilitating that purchase. So we've done our best to try to understand who holds our tokens and why. We know that there have been traditional institutions that have bought them either as part of an allocation strategy or just their own buy and hold portfolio, because we've talked to a few of them. But in large part, I would say a majority of what we think are clientele or token holders, or whatever you want to call it, the people who are interested in using our structured products, are probably going to be on-chain retail today. And there are things that we can do to try to facilitate more mature investors or token holders perhaps using our strategies. And that's things like making sure that they're listed across good custodian partners, whereby if you're not someone who's interested in self-custody, which 99.9% of people probably aren't going to be, you can store it at a qualified custodian or just an institutional grade custodian that can kind of facilitate that side of things. Making sure we have proper liquidity on all of our products, both in DeFi and hopefully over time as we get them listed across better centralized venues. In the CeFi side of things as well will help. And ultimately having the right strategies built, which over time as the space matures and it becomes more clear what it is that we should be building. I feel comfortable with quite a few of the products we have out there. We've had some trial and errors that we've had to deprecate in the past, and that's, I think, pretty much in line with any new space. And over time, that it's just going to become more obvious what should be or shouldn't be put into an on-chain structured product.
And talk to us about how this works. So my understanding is, somebody buys a token and, you could create these different, like you kind of call it like baskets, different things like that. How is the structure formed?
Yeah, it's a great question. If you're looking from a user's perspective, there's two ways that you can, say, purchase a token strategy. One is via traditional kind of secondary market mechanisms, like just simply because they're ERC20s, some of our products do have secondary market liquidity, say on a Uniswap or potentially on a centralized venue. And in that case, you're simply swapping like you would with any other token. So it's a pretty familiar process. But what's really interesting about how our protocol runs, and I think it's kind of cool and new and novel to the on-chain space, is that anyone at any time can actually mint a new unit, whereby, say, you mint a unit of the DeFi Pulse Index. What's happening on the back end is the protocol is facilitating going out to decentralized exchanges, actually purchasing with whatever you put into that, whether it's ETH or USDC or whatever it might be, purchasing those 13 or so underlying DeFi protocol tokens based on the percentage of what they're allocated in the methodology, and then actually pulling them back into your wallet and minting a new unit of DPA on top of it. So that function of mint, which is, I'd say it's relatively familiar off chain in, say, the ETF world, but at scale, This is facilitated by a smart contract on chain. Anyone can do it that has access to the protocol and to our app site. And anyone at any time can mint a new unit. And on the flip side, you can also redeem for the underlying constituents, which I think is really interesting. Let's say you don't believe in the methodology anymore, or you're not willing to pay the annual fee, which calculates at every block. You can simply just redeem, and you're left with the underlying constituents in your wallet as opposed to holding that DPI token. So it's interesting. And the same thing happens if you want to mint or redeem a yield token. Let's say we have a strategy like our money market index that goes out and actually facilitates stablecoin lending across Aave and Compound and Notional. If you mint a new unit, it's going to facilitate that on the back end, leaving you with one token that represents all those assets out across the DeFi universe, aggregating yield into one central spot. And if you redeem, you're left with whatever you came in with. So it's a similar concept. It'll just be those stable coins in your wallet. So it's pretty unique to on-chain structured products in terms of how they function. And I think what's awesome is it really democratizes access to these types of things. Again, it doesn't matter who you are, where you are, how much assets you have stored in a token, you're able to facilitate using the protocol.
Yeah, that's very interesting. Regarding kind of how you go about building these products, what are the important considerations? I know you mentioned a few of them as you kind of talk through different popular strategies. I mean, as someone comes to you or you guys think about it internally, what are some main things that come to mind, if you will, as you kind of put these things together?
Yeah, that's an awesome question. We've developed, I'd say, a pretty strict internal review process over the years that perhaps in the first kind of the onset of the organization wasn't super strict, and it shows in some of the product offerings. But obviously demand is the key driver, right? Can you facilitate demand? Is it sustainable? Is it a fab, or is it something that we think will be around for quite some time? And we allocate different resources across what we call our org stream, our pods, and growth and product to look at each individual potential product and try to identify, is this something that is going to be here in 3 years, in 5 years? Is this a theme or a strategy that isn't, just new and kind of flashy for the time being? So that's one element of it. Two is, can we actually facilitate this strategy in a way that's, safe and accessible for users? So looking at, it's the underlying protocols that we might use. Are they battle tested? Are they properly audited? What are kind of the makeup of those protocols, and how will it affect kind of the end client, token holder experience? That plays a pretty major role. And then, three is just who would be interested in actually helping us distribute said product. Will it fit the narrative for a centralized entity? Is it good on, say, wallet providers across DeFi? Who is it that will help facilitate this and make sure that the right people have access to it? So it's doing some market research with our partners to try to understand, who that might be. And then ultimately, you kind of weigh all of those things. You can also toss in, how hard is this to build? How much effort and resources for the organization is this going to actually cost us? What's the time sink into it? And try to come to a general consensus as an org as to whether or not it's a product that's worth building. And I'd say we've got more strict on that as of recent. I think we're putting out some pretty cool products here recently, and largely due to awesome partnerships. Like we had the large cap index with 21 Co, who's the parent company of 21 Shares. They're obviously a very good crypto name with a great background. We have next week, actually, we're launching a partnership with CoinDesk Indices around their ETH trend indicator, which I think is an awesome use case for our protocol, in that it's going to actually, the token will dynamically allocate between ETH and USDC depending on what that indicator shows. So it's a really simple way for you to momentum invest, for lack of a better term, based on a pretty thoughtful methodology that CoinDesk Indices has put out. And from your perspective as a user, you're just holding a token, right? So I think that's quite interesting. But to the broader point, we're tightening the hatches a bit on what products that we do build, because it is difficult to hit the right audience in the middle of a market like this.
I like the concept of the creation redemption process. It kind of, like, to me, it seems like it would be, if the token I purchased, like the DeFi index, maybe, if the price went up relative to the net asset value of the tokens, where it kind of, almost like an automated market maker would balance those out, where people would come in and redeem that token or
Yes.
create it if it was under NAV.
Right. That's exactly it. And you can take advantage of that if you're an individual arbor, but likely it's going to be some professional unit out there that is doing that. But it creates a more efficient market. And generally speaking, our tokens trade really close to NAV because of exactly that. Anyone can facilitate that arb if they have the resources to do it. And that's kind of what efficient markets are all about.
Yeah, it definitely reminds me just some pieces similar to the create redeem process on the ETF, traditional ETF, right? In certain ways. I'm curious though, from a distribution standpoint, you mentioned distribution earlier. What does that look like just for folks, who don't understand that process in this space? It's kind of a hard one. There's some nuances there. I'm just thinking from folks who understand the traditional mutual fund ETF space versus on-chain tokens and how they work. Obviously, you're finding a good partner,
right?
Going through that process. To your point, you need the demand before you're going to go down that rabbit hole of creation and that whole process, right? I'm just curious, kind of what that looks like in a distribution element.
Yeah, I think for lack of a easier way to put it, there are certain constraints that we have as a global organization with a token product that is largely undefined, that really only allow for us to try to work with, I'd say, kind of more head of the fish type distribution partners. Like what you look for as a provider of tokens is not so much the individual person or entity or whatever that's going to purchase that. It's rather what platform has the right audience that can actually benefit from an on-chain structured product. So largely that's been our plan of attack, right? It's find intermediary platforms that have an audience that fits the bill for whatever product that is, potentially offer them some incentive to highlight the product, and then work with our team to actually facilitate we have something called a Flash Mint SDK, jumbo-y way of saying an easy way for them to integrate that mint redeem optionality into their platform so that users can actually access that structured product pretty much on demand, or if there's sufficient secondary liquidity, perhaps we don't even go down that rabbit hole. But to your point about distribution, it's because we are global, there's no surefire way to access a single market and really try to batten down the hatches in terms of how you attack that single market. You have to take a little more broad stroke. And I'd say in a market like this, where I don't know if even retail knows what they want, it can create a harder sell, for lack of a better term. It can be a little bit more difficult for us to get the products where we want them to be. But that's a strategy for today. I would imagine over time, as it just becomes more clear what and who and how these products are meant to function, and in what jurisdictions perhaps they can function, we'll readjust and reevaluate.
Yeah, definitely makes sense. Yeah, as things happen, you're going to reiterate and look at what the opportunities are and kind of course correct as you move forward.
Yeah, definitely. That's kind of the name of the game in this space. And nothing, what you think is going to work in 3 months, generally speaking, 3 months from then, it is not what you actually are doing, right?
Yeah,
which I love
for sure. I know that's the fun part of it, right?
Market's constantly evolving. To get into kind of the nuts and bolts of it, I think it's really interesting, the product that you guys offer, because it kind of reminds me of like an ETF, but being on chain. I think it's a really cool aspect of it. How does how do you guys think about like the operational side of things? Like, do you need legal setup for this type of structure? Do you need fund administrators? How does the service provider aspect work if it's even needed for these type of products?
Yeah, those are, I think, two very different considerations for us. On the administrative side of things, because we are protocol on the public blockchain, virtually every move and every token that we have is publicly available. The collateral is there. It's all fully collateralized. It's on chain. You can verify. So it's certainly less relevant. I think from that standpoint, what we try to do is just be able to articulate things like you talked about with NAV, or some of these more basic standards around what the token is, how it functions, what should expectations be for the user, and do our best to put that in our marketing content on our website in a way that's just clear and obvious for users. But the administrative side of things is largely solved by a blockchain. At least that's how I view it. And I'm certainly I'm sure that you'd have, Skylar, you'd have a different take on what I just said. So I might just hold back.
No. Actually, I mean, I agree. I mean, what you just explained earlier, I mean, just, the execution of the smart contract solves for a lot of the operational workflow, if you will, deliverables that a normal admin would have to deal with, right? Which I think is fascinating, and it's amazing for anything that's built on chain and what you can do with it. I'm just curious too, just from a timing perspective, how long does one of these on-chain structured products take to complete and build?
It depends on what it is. Largely the complexity of the token. Like we could spin up a traditional index token probably in a few hours, maybe even less. And there are certain platforms out there that offer kind of a self-serve, and we're getting to this point with index protocol as well, where you or I or anyone who's got an idea and a thought can go in and actually build these. At the inception of Index Coop, it was formulated by a group called Set Labs. They had built just that. Index Coop initially was meant to be the product and marketing arm kind of Set protocol. They had the platform, they had this beautiful self-serve UI, and then they wanted, some group to come in and spend all their time finding the right products and then facilitating the distribution of those products. And then anyone else, whether it's a traditional fund or, again, my dad, who's got this brilliant on-chain investment idea, can go in and actually build these tokens. And I think that's really cool. But over time, as you add complexity, as you add layers of yield, if you add new modules to different protocols that offer different things, that's going to require a fair bit of engineering lift. So for some of our products, like the money market index I previously discussed, we did have to add a few different modules for different protocols that we haven't had before, and it takes months, sometimes I'm sure into the years if you really get complicated. So back to your point about what products make sense to build, I mean, certainly those are considerations, and you have to be right. If you spend 6 months building a module for some protocol that has a hack or an exploit, or potentially just isn't what they thought it were, it uses massive incentives to get that demand, and then that dries up, then we've just wasted, as an organization, a lot of runway on something that's not going to produce anything for us. So hope I answered your initial question there. I think I went on a bit of a rabbit hole.
No, that's helpful. I'm just thinking I kind of equate to what we deal with on the traditional side, just comparing, on traditional ETF process, 4 to 6 month process, filing with the SEC, going down that the back and forth you have to deal with for just setting up that traditional product. But the operational, in your case, the operational on-chain activity, as you said, if it's a simple product, can be built in hours potentially. So I think that's very, very important and unique point to bring up to folks for sure.
Is there any legal setup necessary?
That's a great question. And I think it's just an evolving space. As an organization, what we've done is just make sure that we have the proper legal counsel to support every decision that we make. And that is everything from how our organization is structured, what sort of hierarchy or facilitation can we use to make sure that we're able to facilitate operationally efficient, right? Actually be able to push out good products and good content for everyone without, exposing ourselves too much on that side of the aisle. Same applies from a product perspective. We have done legal analysis on a lot of our products. We try to understand the pros and cons and how they might fit in different jurisdictions. And I think in time, it's just something that needs time for regulators across the board to really be able to first articulate what is it that we build. It is different. Yeah. It's not an ETF. It is an on-chain. We are a technology provider. And in principle, a lot of the functions that require regulation, and this is just my 2 cents, not an Index Coop stance, but might be abstracted away by it being a protocol and a blockchain. But there's, I think, a pretty delicate balance that we try to take in as an organization. I know that's not unique to us. There's certainly everyone that's building in Web3, every organization that's a DAO or decentralized autonomous organization is trying to kind of balance these two things. And all you can do is really put your best foot forward and try to have the proper mechanisms in place to do the right things when it is more clearly defined.
Right. Yeah, definitely. It's an ever evolving process for everybody in the space.
Yeah,
right?
No doubt about it. I'm sure you two feel it as well.
Oh yes, for sure. I'm curious, Jordan. what does the state of the market look like for these structured products? How big is it? How many players are in the space? Obviously you guys are building these amazing products right now. I'm just curious what it looks like.
Yeah, it's very small. I think that's at a high level. That's my summary for you.
Yeah.
I think we put out a really cool, unique report. It was the state of on-chain structured products. It's about 4 months old, so the data is a little stale. But at that time, on-chain structured products, which I defined early on, made up, I think it was about $2.4 billion worth of the total crypto market, which, is a trillion, give or take on whatever day you look at it. Relative to those off-chain, say ETP and counterparts that are in crypto, they make up, I think it was about 48 to $50 billion worth. So it's a very small kind of niche space today. And we've, I'd say, defined a lot of the reasons why throughout the course of this conversation, from regulatory to, just the makeup of the product, to demand, to not having good things to build for some folks in their eyes. And that's shown, a lot of Index Coop's biggest competitors, say a year and a half ago, are no longer there. But we have seen a fair bit of new entrants here recently who are starting to pick up on, hey, this is a relatively interesting topic with some applicable use cases that might want to get their name or their hat in the ring. But it's small. Again, it's small. And for what we do, which is really more the index token side of things, that narrows it even more. I mentioned that there's a pretty big cohort of people trying to solve the on-chain yield space, and that can be via platforms or via vaults. But these index tokens make up a small percentage of that 2.4 billion, a very, very small percentage. So the space has a lot of room to grow. In fact, I'm excited every time I see a new entrant because it just brings more, say, validity and notoriety to what it is that we're building. I know there's a lot of interest from traditional firms. I spend a lot of time talking to them. They're fascinated with what we've built and what other protocols and on-chain structured providers are building. And a lot of it has to do with some of the efficiencies it can create, I'm sure, in that kind of middle office, back office environment. But the question from my standpoint has always been, well, how in practice, how does this look? Is it a public blockchain? Are we working with private blockchains? There's a whole bit of unknown, kind of unanswered questions. KYC AML becomes a part of it. That's a feature that we're adding to Index Protocol with the launch of a real world asset index here in a month and a half, which is pretty exciting from my perspective.
Talk to us about that. I'm curious.
Yeah. So, obviously there are different ways to confirm who you are at the wallet level. And the way that we've approached our real world asset index is pretty similar to how others like Centrifuge have done it in the past. We're partnering with a group called Parallel Markets. They're going to actually facilitate that KYC through essentially an NFT, for lack of a better term, in a smart contract wallet. And for you to be able to actually interact with our product, you have to have that NFT. So it has to confirm who you are. You have to pass AML standards. You have to be in the proper jurisdiction, things of that nature. And a lot of groups are trying to tackle this as well. And I think that it certainly scales well. But we talked about distribution. There's no better example of kind of the chicken and egg that we have in our space right now. Like the only people who can access this real world asset index are those who are willing to essentially dox themselves and hold a KYC bit in their wallet, and that are using that specific provider as well. There's no standard across the ecosystem. And so it certainly limits the exposure of your product. And we're not the only one going through this challenge, but definitely something to consider.
Problem.
Yeah, it's a bit of
challenge,
a problem, but I think it has more to do with us just being early stage. My personal thesis, again, not an Index Coop stance here, is that everything that can be tokenized probably will be in time, if not because of the operational efficiencies that we've seen, because of things like creating more efficient markets, lower barrier to entry, like you guys know the deal. And B, I do see KYC AML being a part of kind of where this space goes, and having to have not really a standard, but just something that we can all agree on and say, this is kind of what we're looking for at the wallet level to be able to interact with protocols and things of that nature. And I think it's going to pick up. I know that other groups have tried, like Aave put out Aave Arc, and it's had a little pickup. I know that Uniswap with their new protocol updates are going to essentially allow for KYC AML, which is pretty exciting. in time, as the space matures, I'm sure we'll just see more of that.
Yeah, I totally agree. There's a lot of demand for tokenization, real world assets. A lot of conversations happening. I think there's a few big players that just kind of at the bank level that just completed a few different opportunities recently that were in the news, right? So to your point, yeah, it's being early. Sometimes you have to dig in and get your hands dirty and figure things out, and that's kind of half the fun of it, right?
Yeah,
To see what's going to happen.
A lot of hands are dirty. We're walking through mud.
Yep.
I think anyone who's
Everybody's
building
in it
this,
together.
Yeah, in this bear market, you're knee deep in mud, just trying to get through it and trying to scrape it off and move on the next day.
100%. I totally agree.
Absolutely. You one of the things you mentioned with the creation process of new tokens, that when somebody makes a purchase, there's on the other side of that, they're running transactions through a DEX to be able to purchase like some of these different tokens. I'm curious to, right now gas fees are low, but as gas fees, maybe they increase like they did in 2020, 2021, do you see that causing any potential issues for products like these?
Absolutely. Absolutely do. And that's why you build things to fix it, for lack of a better term. And we're really excited. Our engineering team has been on fire recently. And they just put out for index, the large cap index, this module called auction-based rebalancing. And essentially, as opposed to us going out and having to make that liquidity via DEXs, all of a sudden we can become takers, whereby you can open a window for anyone, whether it's a market maker, a DEX, whatever it might be, to come in and actually, as part of just a general kind of auction mechanism, facilitate that rebalance. So in high gas environments, it might make more sense for a more centralized market maker to actually facilitate that. And the end user would see a better user experience as there's less NAV decay and things of that nature. So we're prepared for it. All of our upcoming products will likely use that type of rebalancing mechanism. We're going to put out a very sleek, nice app interface for public facing. So anyone can come in and participate. Any market maker out there who wants to get involved in the on-chain structured product space will be able to do it. But in 2021, that was certainly a problem, and it impacts client token holder value at the end of the day. And so it's a problem that we wanted to solve.
Yeah, definitely. That makes a lot of sense. You mentioned earlier just one piece about secondary markets. I'm just curious, what does that look like today? Is there interest, from platforms as these are created as far as a secondary opportunity?
Yeah, there's been a fair bit of interest at the DeFi level, at the DEX level.
Yeah,
a lot of our products, if you go onto Uniswap, you'll be able to find them and be able to trade them secondarily. In March of 2022, our DeFi Pulse Index was listed on Gemini, which marked the first centralized exchange listing that we've had on any structured product. And it was a big day for Index Coop for obvious reasons. Now, there are other considerations when you talk about centralized entities that come into play, as you can imagine. Ideally,
of course,
every entity in the world can access these types of structured products, but they're all, going through their own due diligence process, to put it lightly. And that was a big day with DPI and Gemini. We were quite excited about it, but obviously things at the end of the year kind of shook up how that platform looks today, and it hasn't really yielded what we were hoping it would. But in time, again, as more clarity comes, we're going to continue to see more and more of these types of things, because at the end of the day, I'm sure that a platform wants simplicity and less frictionless experience for their user. And not just us, anyone building on-chain structured products, that's really what you're aiming to do.
Can you talk to us about how the custody aspect works? Like, could I transfer these assets to, my Ledger personal wallet? And in terms of leverage, how does that aspect work? If I want to, invest in the 2x Ethereum leverage pool, different things like that. Can you talk to us about those aspects?
Yeah, absolutely. So again, at its core, every token product is self-custody, meaning it's held in your individual wallet, but it's an ERC20 token. So virtually anywhere that ERC20 tokens can go, these structured products can go as well. What we've tried to work to do is make sure that custodians are ready, right? That they have support for this particular ERC20 token, whereby if anyone can come in and actually just transfer it without any issues. And so we've built a really good network. And anyone that has a custodian, whether it's a Copper or Fireblocks or BitGo or Coinbase, whatever it is, can also request that ERC20 tokens are are supported. So that's one element. Ledgers and safes and all of these kind of on-chain solutions, you're going to be able to do that today. On to your other question, remind me again what that was. It's the football
Leverage.
brain. Leverage. Okay, there you go. Every leverage strategy we have is going to look a little different. For example, our interest compounding ETH is essentially just a recursive staked ETH strategy where we deposit staked ETH, we then withdraw ETH, we go out and essentially buy more staked ETH and just kind of loop that. So it's a way for you if the staking rate is higher than your borrowing rate, essentially you're just kind of getting that delta over and over again as you loop it. Similar concept applies to some degree to our leveraged ratio products like our ETH and Bitcoin 2x Fly. All that we're doing is depositing whatever asset that is. We're pulling out a stable. We're then going out, buying more of that asset, depositing and continuing that kind of loop. And within that, we have a technology that's called our leverage ratio that essentially just automates where you are from a leverage perspective. So if you're over levered or if you're starting to get at risk of there being a capital call or whatever you want to call it in this space, it's going to kind of de-risk that and de-lever that via some trades. So it's a way to automate that process so that you as an end user don't have to keep going back to Aave, look at where that leverage ratio is and say, oh, I need to sell some of this now to make sure I maintain the proper ratio. There are strict kind of methodologies in place that if you say go on our website and look at, I can't name them off the top of my head, but they'll maintain a proper leverage ratio just via automations on the back end for the end user.
Jordan, tell us what you see upcoming in the future. Where's this industry going? Structured products. What do you see happening in the near future, long future?
Yeah, I can tell you from our perspective what we're doing. Again, trying to really democratize how this functions. So we're going to be putting out kind of a self-serve UI so that anyone can come in and build on top of Index protocol. And I think over time, as we had talked about, as it just becomes more clear what we should be building and why, more and more people will want to do that. More and more people will have access to building these types of strategies. So I think that's a vision for everyone, whether it's at the platform level or some fund in the traditional setting using this as the infrastructure to actually build out their strategies or whatever it might be. I see a huge opportunity simply just as an infrastructure provider for pretty much anyone who's building in this on-chain structured product space. And that's, partnering with traditional firms who are interested in getting in this space. It's looking at points of sale in crypto and trying to articulate the vision there. Again, that kind of self-serve feature I'm really interested in and really fascinated about. Two, I think this is a big one. We kind of talked about everything that can be tokenized will be, and over time we'll see more and more assets come on chain, and likely there's going to be a simplification layer or kind of a management layer on top of it that says, I want to essentially target this specific niche or this theme, and I want to set it around these parameters, and I want to make it something that me personally as an investor can do hands off, buy and hold, and not have to spend a whole lot of time operationally doing it. And that could span real estate, that could span art, that could span, stocks, bonds, whatever it might be. I see that vision being a reality where we're actually facilitating real world assets, as some would like to call them, via smart contracts and via protocols, just to save money, save time, make it more efficient for the end user, things of that nature, and also add a layer of composability that doesn't exist in assets today. So that's an exciting future. For our space at large, I think there's a lot here for people who are interested in building. I think traditional firms are going to continue getting more involved, whether they buy out groups, partner with groups, or build it themselves. It's definitely at that point now where there's conversation around how that looks. And as each firm kind of gets more and more involved, it's just going to continue to kind of build the spotlight around what it is that we're doing. So an exciting space, kind of a fascinating space, and some of the issues that we talked about today, this clarity around what to build and why will just become more clear, clarity around regulatory environments, around KYC, what's needed, what's not, should just become more clear. So the vision is there, but the question is, how long does it take for things like this to get there? And who's going to be around to be a part of it. And hopefully for us at Index Coop that we're included in that equation in some way, right?
Yeah,
Absolutely.
100%. And going back to like one of the things that I thought of as you're saying that is like, our conversation about the legal stuff where it's like, it really seems like it, between like the bookkeeping, the legal setup structure, I feel like there's huge opportunities on that side of things where you could save hundreds of thousands of dollars, basis points on basis points for investors. Really interesting to just kind of think about the future of that.
Yeah, definitely. Just from my side, being intimately involved in the past of creating mutual funds and ETFs, I 100% agree, Mike. That is definitely would be a huge savings what you guys are building here, and then even just not just the front end setup, but the operational infrastructure through smart contracts and through what you built on chain, alleviate a lot of the challenges of manual intervention of doing work. So definitely kind of scales that up, and to your point, as you mentioned, Jordan, more efficiencies and true scalability from an on-chain product makes a lot of sense.
Well, I'm happy you guys see the vision as well. Now can we recruit everyone else to kind of
there you go.
On board?
Absolutely.
Hopefully this podcast is what does it, right?
Fantastic. Absolutely.
This will be it, man.
We all could go home now. Yeah.
Well, Jordan, this has been a lot of fun, man. Really appreciate you taking. Where can people go to connect with you and learn more about Index Coop?
We have our website, indexcoop.com. Feel free to reach out to either the institutions or the partnerships page, and you'll come directly to me. But also have a LinkedIn and a Twitter. I'm sure you'll send some of the notes there. And do not hesitate to interact with us on Twitter. Our Twitter following is at about 50,000 today. We try to be pretty active. Like, we really want community feedback. We want to understand what it is people are interested in building. That's a huge piece of this pie. So reach out to us there. Feel free to join our public Discord as well, where we talk about certain things like product ideas. We try to get surveys and inputs from folks as well. We've got a pretty big Discord following also. I think I just about covered it all.
No, that's great. And again, thanks again, Jordan, for jumping on. This has been a great conversation.
Yeah, thank you guys. Appreciate it.
We hope you enjoyed this conversation. Please make sure to like and subscribe for more content like this. And if you're interested in starting a fund, whether it's a hedge fund, VC fund, whatever type of fund you're thinking, please reach out and let us know if there's any topics that you'd like for us to cover. Thanks for watching.